very good morning to our listeners. Hope you all had a great evening. A couple of things here I want to touch upon as we head into the North American Open. Firstly, very early this morning we had some initial commentary out of Chancellor Merkel's visit in China with Wen Jiabao, the Premier. China have said that they will continue to invest in European government bonds. However, they do see the situation as a somewhat risk. Nonetheless, as we head in toward the North American Open, despite some of the general developments of somewhat political cohesion we're seeing from Germany and China, we have seen a rewidening of the 10-year government bond yield spreads, predominantly led by Spain, which is at its widest point as we speak. The last hour really contributing to much of the move as the US has come into the market, and we've seen a bit of a pickup in volumes. A couple of things to be noted here. The Wall Street Journal article we saw late yesterday still drawing some attention, commenting on the fact that Moody's 3-month review of the negative outlook on Spain's sovereign is coming up towards its deadline, so there is a potential there that they could be cut, and if so, it would be to junk status would be the most likely option. Elsewhere as well, we have some comments out of a German advisor to Merkel, Feld, one of the German wise men, who has been pretty vocal here in saying that any unlimited bond buys by the ECB would be in direct violation of its mandate, which is killing some of the optimism at the moment that the market has been so desperately hoping for from Draghi in details of buying of bonds. And then just taking a look elsewhere, Italy has been very much in focus, particularly with the heavy supply schedule they've had this week. But in terms of the 5 and 10-year bond auctions, they did go through smoothly. They saw some decent demand on both lines and the 10-year new benchmark and fulfilled over the top end of their allotment. However, again, they're still a bit wider, dragged by the general risk-off trade we're seeing across the board at the moment with lower equity markets and a weaker euro currency. Looking ahead towards the rest of the session, we'll have the weekly jobs data out of the US. We'll also look to wrap up the issuance from the US Treasury with the 7-year note auction as well later this evening. That pretty much concludes the opening wrap from me. So for the moment, I wish you all the best for your trading day.